Hello, trading is closed on December 21st, 2020. We'll do our disclaimer, then go over our calls. It's my trading plan for tomorrow, December 22nd, 2020. Just remember, as always, if we gap sharply in the undesired direction, the call's kill before the open. And as always, there's no guarantee I'm right. Well, the Chinese have a saying, may you live in interesting times. Last 24 hours certainly were very interesting. First of all, we look for the pattern with the early high. This is it. Doesn't mean you won't gap down. The pattern tends to rarely have a high in the final hour. Unless there's early weakness, there tends to be a positive day. If there is early weakness, it tends to be followed by additional weakness. Tomorrow's pattern also has the early high. Doesn't mean you won't gap down. Here's what we said. Friday's high was a candidate for the end of the rally. If we gap under Friday's low and follow through, it's hard for me to see how we can recover. We got the gap, prompt move outside the day's range. We need follow through. If we get follow through, meaning if we undercut this low, I don't see how we can recover from this, and I think we've made a meaningful top. I think it's going to be hard to recover, but until that's ruled out, you can always be fooled. I've been fooled before. Now, we had this old target, 36.43.21. It's an optional target. Normally, I don't keep these. For some reason, I just kept this around, and it printed, and there was support under the target. Early on, we got an ultimate buy signal. An ultimate sell signal. Obviously, the ultimate buy signal was already satisfied. MEJT said it was false and that we would retrace under this line, which we did. We got enough to signify, to satisfy the ultimate sell here, but almost always, not always, but almost always, you're going to get more than this. So almost always, you're going to undercut this low, which is what it would take to confirm this break. Here was the idea. Took a Fibonacci target of the prior consolidation. We hit it pretty much on the nose. There was a huge drop in futures. The recovery so far has just come about 100 points and just re-challenged the old lows. Didn't take out any of these prior highs. So for now at least, it hasn't accomplished anything. Now I don't know what will happen tomorrow, and if we gap up and take this out, then it did. But so far we had a huge rally which couldn't clear these highs. Now nothing's impossible. This is a hole in the wall gap, and these things tend to fill pretty quickly. If it doesn't fill the same day, which was today, and it didn't, either it fills by gapping up tomorrow over this high, or else it's not required to fill anytime soon. Here were multiple highs. We closed, this black line is the close, we closed under multiple highs, and that's not good. Now what you really want to do is to close under some, I should say that with just a few minutes left to trade, we had traded over some of these highs. And after recovering the highs, the next step, if this recovery was to amount to something, is to take out these highs. Instead, we didn't. We closed under these highs, and with just 5 minutes left, we actually were more negatively closing under some of these prior lows. To me, the action in the last 5 minutes doesn't mean that much. But once you're under these lows, if you close there, that's very negative, particularly when you have a double top like this. You close under both of these highs and under the intervening lows, that's negative. And I'm not certain how much a wall in the last 5 minutes or so is going to mean, because often these walls get rejected at the open by gapping under this low. Now, if there's a valid break of this line, it targets the low of the cup. It isn't a valid break, even though we gapped under it, we recovered. But once it breaks, even if it isn't valid, the odds are overwhelming it's going to break for keeps at some time. Well, this remains a valid count, and let's just look at this last wave here. Well, this was the count I had, the original count. It looks a bit funny to have this wave A here. It doesn't break any rules, though. We had good fibs here. And if that's the right count, we have a clear ABC, good fibs, 3 waves down. This declines over. You'd expect to count 3 waves up. And you can do it, but it looks kind of contrived. And it looks as if there should be more to this recovery leg. But this isn't the only way to count it. What if we don't put wave A here, but we put it here instead? If that's A, you have an A, B, C with good fibs. You then have an A, B, C here. Wave E truncates at the end, and today's tank is wave 1 of some degree down as an impulse. And if that's the right count, this high is going to hold, and it's a matter of time till we have another strong impulsive wave 3 down. And if that's the right count, which we don't know yet for certain, we've completed an ending diagonal triangle, and this morning's drop is the start of something major on the downside. So once again, all you need is confirmation by undercutting this low. That's all you need. Mixed signals once again. Tomorrow's pattern has a really high. We could gap down. It is posited that the volatility index printed a bar over its upper Bollinger Band. Once it reverses, it gives a buy, but it hasn't reversed yet. It's positive we gap down, hit a lower low, close not only over both lows, but also over the intervening high. Can't just slough that off. And we had a hole in the wall gap. And usually, it'll fill by early tomorrow. And it should fill at some point regardless. But, it's negative. Today's normally bullish pattern closed negatively. We had a huge rally. It closed not only under the midday highs, but merely retested prior lows. I think it's very negative that we had such a strong reversal right from that long-term target area we had identified. That's what you want to see if the top's it. You don't want the market to let people who want to go short re-enter easily. And so far, that's the picture. The wall into the close is negative, and it's negative that the trend line support failed, even though the break for now at least hasn't worked. It recovered. So this is a potential impulse down. You can count this as 1, 2, 3, 4, 5. But even if it's a 3, these strong impulsive moves down, if they get follow through with the pattern we have, can lead to a lot more on the downside. How much? Well, I was going to save this for the end of the year, but I think it's relevant to point it out now. A typical year has about 500 standard targets and 150 ultimate ones. If the same pattern generates the same thing, I just count it as a standard target. Now this is how many standard targets we have unsatisfied since I came up with the system 18.5 years ago. Most of the time, every single target prints at some point, and there only are a couple of years with more unsatisfied targets than we have now. And there's never been a year where the number of weeks with unsatisfied targets was this high. It just never happened. We have 6 unsatisfied ultimate targets in 18.5 years. We go about 3 years in between targets where these don't print, and I've got one. So this is right now a statistical outlier. Doesn't require it to print tomorrow, but you can see that we've left an unusually large number of targets behind. We have a lot of other negative stuff, and all the bears need is to undercut this low with a straight line drop, and I think we have much lower targets when and if that happens. Tomorrow's pattern has the early high. Look out below if we tank. If we gap under this, which I'm not predicting one way or the other, could be a long way down. And that's today's call.